The US dollar rose quarterly, and the RMB quarter may be flat or see only a slight increase. This is the so-called impact of economic structure. Given our country's so-called economic scale and very complex, long industrial chain. Impact. My own prediction for this is as follows. In other words, looking at the processes experienced in 2020 and 2021, 2020-2021. Of course, including what I just mentioned, we are also very anxious. Especially in mid to late April. From the high-frequency data we saw from April to May. The simple conclusion is roughly like this. From the data perspective, or from these high-frequency basic data, in most directions or indicators, we are similar to the first outbreak of the pandemic in 2020. Compared to March and April, recovery was faster than in those 2 months of the previous year. Of course, we don't know what happens afterward, we're just saying May is more likely to be compared to April. The first two were compared to April, and compared to April in March of that year. It seems this time the elasticity will be faster, but the recovery speed will be faster. As for my own predictions, of course, these are for reference only and cannot be used as a basis. Because recently, last week I was able to visit 2 cities on business trips. They are Shenzhen and Wuhan. This was also the first city to adopt the so-called nucleic acid test system every 2 or 3 days. City. Of course, Beijing now has daily inspections. Because screening is required. Looking at the results, whether the new normal is this so-called big city convenience or not. Or call it the high-frequency nucleic acid test, but it seems. In summary, with the resolution of the Shanghai issue. Or we can call it a difficult solution, perhaps we will soon enter a new normal. What does this mean by defining it as the new normal? What does it mean? This is very similar to starting in February 2020 or January 23, 2020, in Wuhan, 202022020123. Then in February, it goes nationwide, and in March, it's basically almost nationwide. 2, 3. On April 8, Wuhan began to lift its lockdown, and of course, the whole country gradually resumed its activities. 48. This is the growth of flow. From the moment we first went through this process, the whole country was facing both mobility issues and economic issues. The issue of resuming work and production returns to the question of how, under such circumstances. Because at that time, everyone was getting used to wearing masks for the first time. Various scannings, cautious travel, and various other issues. But even under that circumstances, we basically returned to a so-called normal state in May of 5. Then, starting around July and August, some areas started to see year-on-year growth. 7, 8. Of course, foreign trade games are fast, and overall year-on-year growth started in September. 9. This is probably the process of recovering from the so-called new normal. No matter how everyone presents this new normal. Perhaps we may have policy adjustments, or other circumstances as we see society today. In practice, all major cities are ready to conduct nucleic acid testing everywhere. Test it, then once every 2 days, once every 3 days. No matter what it is, it seems that with Shanghai's problems or so-called difficulties, it is past. Probably soon we will have a new normal. Because China's problem is, or what China has experienced over the past 2 years. We are at a. Just how do you? It's about how to transition to one within the scope of policy requirements. Normal economic and living activities can still be maintained. It's a highly adaptable process. Usually, it's faster than everyone expects, and actually faster than we anticipate emotionally today. Some. Of course, as I just mentioned, in the cities I've visited. Shenzhen and Wuhan are already like this. Of course, over the past week, many cities have started using this method to routinely restore flow. It's just a whole bunch of things written below. Including our 3 team-building trips to Xinjiang last year. As the saying goes, if you have 2 green codes and no signal, you can get a 48-hour nucleic acid test. 48. Last year, we organized 3 team-building events but none succeeded. It's because the regulations are extremely strict. Xinjiang probably made policy adjustments around last Thursday last week. This article is mainly about this, not that the past 2 months were not difficult. The past 2 months have been extremely difficult. But in fact, the simple conclusion is, if we look at the year-on-year growth over the past 2 months. In March and April 2020, the first month didn't look worse. 2020 34. The second issue is that the recovery speed of the month-on-month data is faster than the first month-over-month data. We need to talk about macro basic data faster, using high-frequency data, including the amount of development. That is probably the conclusion. I also guess that China will enter a new normal around June 6. No matter what form this new normal takes, in any case, it will adapt to the situation and enter the new normal state. Although it is indeed quite difficult and possibly troublesome. This page actually wants to talk like this. We don't always have policies in general, or our interpretation of macroeconomics certainly includes our own perspectives. When making adjustments and making mistakes. My own understanding is that this is purely a speculative process. Let me first explain how we view today's policy formation process. There's a very interesting comparison of data, which has nothing to do with these charts. Didn't come to these pictures. In 2020, for the Chinese government, 2020. There is a very useful special bond, which we often refer to as being used for infrastructure projects, including some pandemic-related tasks. In 2021, China's total government special bonds last year were 3.65 trillion yuan, 2021, 3.65. In 2022, after we held the 2 sessions, the special bonds approved were still 3.65 trillion yuan, 20,223.65. 2 years are the same. But actually, last year China experienced a special situation. This is a relatively rare occurrence. Previously, I would explain a bit more about why this matter is considered so important. Economic and macro data showed some changes last year. This allows us to infer the background behind some policy introductions. Because every year in history, the government special bonds issued by China, about 60% goes to infrastructure, with the rest for other additional government expenditures. 60%. Every year, the government special bond is used with money. What does it mean to use money for use? That is, after completing the quota and total amount at the beginning of the year, try to use the vast majority in the first half of the year. Because after the quota is approved, the final result is formed. Once the money arrives, the funds arrive, and then the specific project is implemented. We call it physical workload. In between, you usually need to wait about 1 to 2 quarters. So, after approval, if you use it in the first 6 months, it will definitely play a role back then. If used in the second half of the year, it may take effect next year. So it's generally called using money for use. So how much money does it depend on? In the first half of the year, it is generally used at 60% or even more. 60%. Last year was a bit special. In the first half of last year, I used less than 40%, so last year's money, 40%. In the end, it was all spent. When was this 3.6 trillion spent? 3.6? Mainly during the 4 months of 1990, 1991, and 2012. 901112. Through this very unusual historical act. Maybe I'm just making a personal guess, maybe our policy-making process. I'm talking about the economy. It should be possible that in the first quarter or at the end of the first quarter, or maybe at the beginning of the second quarter, you should be able to figure it out. Last year, China's economic growth exceeded expectations. Because at the beginning of the year, the target was 6% growth, 6%. At that time, many people still discussed that 6% was too low, and the Prime Minister even said 6% was too low for major countries. 6%, 6%. Speaking of which, it's already quite high, so I finally completed 8.1. 8.1. In fact, I guess it should start in the second quarter, due to the extremely long period of foreign trade and pandemic control. At that time, the pandemic was well controlled, leading to a recovery in consumption. This allows us to see everything in February, or the government can look at macro data in February 2nd, too. The annual performance will exceed expectations. For this reason, we have moved our special bonds back on a large scale, instead of moving forward. Another impact this incident brings is that in the months of July, August, and September, because at this moment, it might be China. Let's give an analogy. For school attendance, China might know during the midterm exam that you will be ranked first in the final exam, because last year's pandemic control led to a recovery in consumption. The global pandemic has driven a recovery in consumption, so we have released a series of economic data. Policy was implemented last July, August, and September. It involves many industries, so I won't list them all. But that's not what I'm talking about. I'm talking about the so-called begging flowers released at the end of last year. 60% of the special bonds should be effective in the first half of this year. 60%. And this year's 3.65 trillion will probably be spent close to that in the first quarter, 3.651. I spent almost 30%, since I just finished a meeting in early March. 30%, 3. But in the first 2 quarters, 60% will still be spent, and according to plan, even more. 60%. So this year, it's roughly equivalent to an increase in government investment. Whether from a fiscal or monetary perspective, the levels are relatively high. Of course, this also includes infrastructure. But this has nothing to do with our entrepreneurial work. Speaking of what happened this year, I think from a policy perspective. That's my guess. In March, this is the point I pay close attention to in my observations of the economy itself. 3. After we held the 2 sessions in March, we set this year's GDP target 3 GDP. This year is quite important for China. This includes important meetings and also a particularly important year for us during the 14th five-year plan. And so on, and so on. Since this year is more important, I guess the 5.5 was left with some room for it. 5.5. That includes last year, when people didn't pay much attention, but from the government's perspective, it was in the last 4 months. Efforts will continue into this year. For all the reasons above, I guess there was some room left when 5.5 was announced. 5.5. Of course, when the full-year GDP figures are released in early March, 3 GDP. At that time, the outbreak in Shanghai, or what you call the Yangtze River Delta outbreak. At that time, local conflicts between Russia and Ukraine had already occurred. So I guess these 2 things were taken into consideration. Of course, it's possible that both events unfolded beyond expectations between March and April. From July to April. But historically, this is how it has been in China, especially when we have the expected GDP indicator, GDP. Then, after announcing the GDP forecast target at the beginning of the year, GDP. China has several special years, such as ours in 2000. GDP figures were not published in 2001 and 2002. 2001-2002 GDP. The main reason was the Asian financial crisis in the mid-1990s. Actually, we'll talk a bit about it later, and what's happening now is somewhat similar. Around us. The Asian financial crisis in the mid-1990s led to China's 1999 crisis. 2000 was extremely challenging. 2000. That's why GDP figures were not released in 2000, 2002, or 2003. 2000-2002-2003 GDP. Of course, the 4th year without a GDP data release is 2020, GDP 2020. That was the year the pandemic broke out. You might not remember it, but at the beginning of the year, it was clearly stated that due to uncertainties. So there is no GDP indicator. GDP. Of course, China still misses the GDP indicator in 2 years, GDP miss. It just wasn't finished. One is 2014, where our target is 7.5, 2014 7.5. In the end, I completed 7.4. 7.4. Then, in 2015, the target was set at 7.0, 20,157.0. Finally, I completed 6.9. 6.9. That is the special year in all our history. So this year, I guess to look back at my question. I guess when I was thinking about 5.5, there were all sorts of considerations, 5.5. But there are certainly many difficulties beyond expectations. It will look like it will be after April 4. What I mean by this sentence is that my understanding this year seems to be to remove high-frequency frequencies. Indicators appear to have rebounded better in May compared to April, 54. Compared to 2020, it won't be any worse. 2020. Besides that, this year China may be the most important issue in the second and third quarters. Stabilize the fundamentals. Actually, I have 3 images here, because today we're not talking about this investment. So I just went through it quickly. The image on the left explains how China's August 1st in 2021 was formed. 20,218.1. So we originally used the formation of 8.1 to describe this year's 5.5, 8.1 5.5. But now it seems that the entire 5.5, or at least China, is striving to achieve GDP growth 5.5 GDP. Among them, 5.5 is not very sure if it will be a major challenge. 5.5. During this process, the direction should be adjusted again. This is our guess. So what direction should you set it to? So we say the basic base is stabilized first. So what exactly is a basic base? The middle image is actually just a simple glance. That is, in 2021, China's GDP value added by industry, 2021 GDP. What is industry added value? We'll use it later. It refers to the value-added part of various industries, which is not calculated by raw material costs. Is not measured by cost, but by the added portion. Maybe it's how each of us contributed in this situation. Of course, you can also see that there are many industries with a high proportion of these products. It will become what is called the basic base. So I guess for the second and third quarters this year. Especially in the second and third quarters, the main issue is stabilizing these so-called calls. Industries with a high proportion, or the basic base. Then maybe in the fourth quarter or the latter half of the third quarter. What is called? Well, move on. So in short, I don't know if this year will miss the GDP indicator, miss GDP. But judging by the current difficulties and challenges beyond expectations, the problems to be solved in the second, third, and fourth quarters may be quite different. We need to first restore the so-called contribution and foundation, and the supporting industries with relatively large foundations. Then we address the development issues of highly elastic industries. This is probably just speculation. Another aspect related to creators is that there have been many recently. Calling it financing is extremely cold. Cold. In fact, in the past month, looking at the financing of our own companies preparing to invest in the capital market is indeed quite cold. We're talking about the primary market. In other words, whenever people talk about a capital winter, or perhaps this time, when everyone is discussing how cold the financing market is, how would we view this issue? Of course, these are for reference only and are personal opinions. When we talk about the capital winter, there are 2 issues. If we confirm that it really exists as a primary market, or rather, if that's really the case, of course, what I'm saying is limited to today's judgment. If it really is a winter, it means a shortage of funds. Because investing is about 2 things. The first thing is having money in the left hand, the second is having direction in the right. From the perspective of capital supply, if there is a large-scale and wide-ranging wealth elimination effect, yes, in theory, this will indeed lead to prolonged and significant problems in the supply of funds. Because it has a wealth elimination effect. This is from the perspective of money supply. From today onward, what we talk about is all about today. Although China has faced tremendous difficulties, such as youth unemployment and other issues. The problem was that April also saw significant growth and a relatively high youth unemployment rate. However, the large-scale wealth effect in China may differ from that in the United States. What does that mean? You can see a piece of data. The week before last, we released China's financial data for April. According to statistics, there is an article that is quite anxious type. This is roughly the issue of collapse. But removing it presents a huge challenge. For example, residential mortgage loans have declined, and short-term loans to businesses have declined. Corporate loan demand declined, and consumer loan demand among residents declined. Excluding these issues, maybe it didn't say it on purpose. Or one financial data item is particularly special. The first financial data point is on Chinese residents' deposits. In April, the increase was higher than last April, or you could say it was less than before. 4. In other words, the year-on-year increase is even greater. How much is China's resident savings now? Across China, there are about 230 trillion in deposits, half of which are among ordinary people, 230. Half of it is in enterprises. These two projects are actually more significant than in 2021. Roughly for the same period, the first 4 months were all higher. The reason is that behind this statement is that it is indeed due to economic difficulties. Of course, this may also include the challenge of employment, so people don't spend money anymore. But the main result today is that it doesn't cost money. It's about saving up the money. This is the reason for the increase in residents' deposits. Because at the end of May 2021, China had just recorded the largest resident deposit history, 20215. The first time it has surpassed 100 trillion. 100. At the end of last year, it was about 8 trillion yuan. 08. Last year, the total increased by 9.9 trillion. 9.9. From the first quarter to April this year, the first 4 months or the first quarter each saw an increase of over 7 trillion yuan. 7. So, this year, Chinese residents' deposits have reached 115 trillion yuan, 115. Back in April. This is part of China's property. Chinese residents' assets, besides cash and deposits. How are the assets of Chinese residents constituted? This was in October 2019, when the China Banking and Insurance Regulatory Commission, CBIRC, conducted a survey of about 30,000 urban households in China 2019-1103. Cities, countryside, all spread across every tier of cities. I conducted a household survey. This is the so-called situation of average assets per household in China. So I'll get straight to the point, because we're not discussing it today. This is not about explaining macroeconomic issues. Simply put, the wealth or assets of Chinese residents. Most of the composition is related to real estate. Whether residential or commercial properties, 70% are used, 70%. Finance accounts for 30%, or virtual assets account for 30%, 30%, 30%. Of the 30% of virtual assets, most are so-called bank wealth management or deposits, 30%. And that's not the so-called floating income type, but rather the ones we're talking about related to stocks and insurance. This is probably the composition of the residents. To put it simply, the biggest difference between China and the US is that the US is completely focused on this data. On the other hand, of the assets protected by American residents, real estate accounts for only, or simply fixed assets occupied, 30%, and the rest mainly consists of virtual assets. 30%. Among virtual assets, so-called investment assets. This is what we call floating income insurance, which is stock insurance. All of these factors together account for more than half of the financial assets. That's the difference between China and the US. So, looking back, what do I mean by this sentence? Today, there are definitely confidence issues and consumption issues. Mainly, it's also a matter of confidence. But today, when looking at China's wealth structure from the perspective of ordinary people, although there are economic challenges in the world, but right now, the main thing for everyone is still saving up and not spending. And in terms of total scale, it's not about individuals. Individuals face many difficulties. In terms of total scale, the social wealth on the Chinese side of residents and enterprises, the total scale remains at a relatively reasonable level. Of course, as we just mentioned, finance refers to the ups and downs of the stock market. Temporarily before this year or before last year. It affects the wealth of Chinese residents. But from the asset composition per household we just mentioned, for China as a whole, it has not yet had a significant impact. This is what is called the volatility of financial products. So, what would cause the wealth loss effect on Chinese residents? If real estate faces challenges, then real estate. I can say it's a challenge, or maybe the asset system has a challenge. For today's Chinese residents, that is, the common people, there will be a wealth destruction effect. Of course, recently, let's just mention this. Recently, a lot of financial policies for real estate have started to be introduced in China. Let me briefly mention this real estate matter. Although we have nothing to do with real estate, I also have no advice or push for people to invest in real estate. This is how real estate works. I gave a class in chaos once, back in 2018. At that time, we were talking about the peak of the real estate cycle. Of course, before the real estate event, our conclusion, which I can share today, is like this. Real estate was previously the upper line of China's economic development. How does this saying go? Because during the most difficult periods in Chinese history, for example, 1990 marked the start of real estate pilot projects, 1990. It's about piloting the commodification of this housing system. 1999 was the hardest year after our financial crisis, 99. It's called canceling welfare housing allocation. The year after the 2008 financial crisis in 2009 was no different. 0809. The same was true for 2012 and 2013. 1213. China's last time was in 2015 or 2016. 201516. China's real estate market used to be out of economic control. We went to pull up real estate. Of course, real estate now has its own asset issues and challenges. But today, real estate has become China's bottom line. It's the bottom line of the economy in tough times. So what does this mean this time? In the past, we had no choice but to pull up real estate. It can drive economic growth. Because its multiples are relatively high, and because real estate has a productivity multiple. The GDP ratio is about 1 to 8. GDP 18. In other words, 1 yuan worth of real estate can build an 8 yuan industrial chain, 1:8. It is the most efficient. So in the past, whenever the economy faced challenges, they would push up real estate. Today, it's because we need to control the total asset scale of real estate. Because China is already the largest in the world, and its potential impact. Because it truly has an upstream and downstream industry chain plus real estate itself. It actually accounts for a significant portion of the composition of China's GDP that we just discussed, GDP. Nearly 30%. 30%. At the same time, it accounts for 40% to 50% of the financial assets in China's financial sector, 40% 50%. Of course, you also saw that 60% to 70% of the military assets of ordinary Chinese citizens are protected, 60% 70%. So today, a real estate challenge has become. Of course, it also accounts for 40% of our fiscal revenue, averaging evenly across regions. 40%. But today, when we look at real estate, it becomes a low-risk option. It can't have problems. If something happens, it could indeed have an impact on China. So this is what we briefly explained about the so-called large-scale wealth effect in China. From the resident's perspective, it's fine, but from the enterprise side, there are challenges. But from the deposit side we just discussed, and it's still at a reasonable level. The last one is related to China's capital markets. Let's talk a bit about China's capital market. This is what is called this Buffett, the famous Buffett index. A figure refers to the ratio of a country's total GDP to its capital market GDP. Relationships represent the situation and extent of the country or the capital market itself. Of course, the floating interval it provides has different interpretations. 70 to 100, 80 to 120. 70100, 80120. Anyway, compared to GDP. We chose the broadest caliber, which is acceptable between 80 and over 100 yuan, 80,100. Moreover, it is a relatively developed capital market. This is the relationship between China's GDP and the market capitalization of China's capital. GDP. Of course, the right side belongs to the United States. We'll bring up the American topic later. China and the US are quite different. We'll talk about tech innovation later. The investment of enterprises is related to the investments of our VC. In fact, China was in 2015, the year we first started our business, 2015. That year, China's capital market experienced its biggest bubble. Then it went through what is called a stock market crash. That year, by the end of the year, China's capital market was about 70% of our GDP 70. And that was already the peak. Next, in the middle you see a very large peak. Is because of some situations that occurred in 2007 and 2008, 2007-2008. Special circumstances. Returning to my earlier question, at the end of 2021, China, 2021. The market capitalization of China's capital market is about 90 trillion renminbi, 90. It means our GDP is approaching 90%. 90% GDP. If we include the Hong Kong market, because today there are many large Chinese interconnects in the Hong Kong market. The internet company has also been listed in Hong Kong. Hong Kong's capital market capitalization peaked during the second and third quarters of last year. 5.3 billion Hong Kong dollars, which converts to RMB, is roughly close to 40 trillion renminbi. 40. What I mean is, in the third quarter of last year. Actually, if the capital market counts A shares plus H shares, and Hong Kong stocks as well, AH. The market capitalization of the capital market has probably reached 130 trillion renminbi. 130. So what does that mean? This is already about 1% of our GDP in China's capital market, GDP. Between 110% and 120%. So you might be a bit. Because China's capital market is not yet the most mature. Bubbles are possible. So what does China's capital market look like after it has fallen today? We still have 70% of GDP, which is roughly over 70 trillion if we only count A shares. 70% GDP is 70. Hong Kong stocks have dropped to over 20 trillion yuan today, which together accounts for less than 90% of GDP. 90% GDP. So this is already within a relatively reasonable range. But there's a very important point here, it's the picture shown at the back. I'll bring up this picture later. This is the issue most relevant to China's capital market and the entrepreneurs present and our investments. Yes, even after dropping to today and basically starting to rise. You also notice that China's capital markets have reached a scale. If we count part of the Hong Kong stock market, at least half of it is related to China. Assets. If we include Hong Kong stocks, China's capital market is now at what is called a barrage. In the fee index, this refers to a developed and reasonable capital market size. It means it has reached a level that matches GDP. GDP. So why is this important for entrepreneurship and investment? Because many people ask us about the capital market. Because we also operate in the secondary market, besides our early technology investment at plant number 1. The reason is that this is also closely related to everyone present. Because since 2013, China has been continuously emphasizing the need to increase direct financing and make good use of it. 2013. China's capital market. These two sentences are essentially the same as the same thing. Simply put, returning to China's economic issues, we started the so-called bar down in 2013. RODs are the control of the total loan scale. So how is China's total loan scale formed? Actually, the biggest so-called loan formation cycle occurs after the financial crisis. Between 2008 and 2012. 0812. China controls the total scale of bank loans. After calling it leverage, we also need to solve economic problems. It is necessary to make better use of the capital market. This is also close to the scale of China's GDP. GDP. Looking at the years to come, that's what this chart is about to show. Looking back at the years, the concept of so-called social financing in China will be a phenomenon every year. The total amount of money circulating in China or throughout society. This is the total amount of new money coming out, that is, how much incremental money there is. What it wants to show in this chart is that as GDP increases, our financing scale, or the total scale of social financing, will also gradually increase. And the direct financing allocated to our investments. Equity investment related, capital market related, and corporate bond ratios related to capital markets. During the relatively rapid increase, especially since 2013, everyone has settled on this direction. This also relates to everyone present, because simply put, the issue here concerns China's capital market, or China's financial system, which is very certain to obtain financing from bank loans. This is called controlling the total leverage scale, or deleveraging. In this capital market, whether it's our investments, the money everyone raised, everyone will go public in the future, and there will also be corporate bonds issued in the capital market. This direct financing market will take over and control bank loans. Most of the increments are from proportion to total volume. China is still relatively low at this rate, only 20%. A normal and reasonable value. Looking ahead, look at yourself, the companies we are all running today. The money we raised returns to that capital winter we just went. How will China change? China's total social financing is the total amount of social financing. As China's GDP grows, it will surely keep pace, at least keep pace with growth. As we just mentioned, the key is to increase the proportion of direct financing. This means that with the total volume expanding, the proportion of direct financing needs to be further increased, which solves the problem of market development. It is the issue of the development of China's financial system. How high will it go? What we said 5 years ago has been fulfilled today. Today, let's guess again, in 5 to 7 years. Because given China's medium to low speed GDP development, even with medium to low speed GDP growth, after about 5 to 7 years, or if we take an integer number to 2030, we probably also reach the worst ratio, for example. We will also have a GDP between 150 trillion and 200 trillion renminbi. 150200 GDP. At that time, what kind of capital market scale should be reached? If you look at it year on year, considering China's economic development, this is roughly the same size as the capital market. Because 5 or 7 years ago, when we started our business in 2015, we say that due to the development of direct financing, China's capital market will go from less than 40 trillion yuan scale, developing to nearly 100 trillion yuan. Now, it's almost at this level. Looking further down, in 5 to 8 years, we could probably reach 150 to 200 trillion. 150200. The overall scale level is not just doubling the index. It refers to doubling the total scale. What is the reason? It's because China raises funds every year. As we just mentioned. Because social financing means the incremental amount of money released to society every year. More and more, this is the smallest year-on-year GDP growth, GDP. Or growth slightly above the GDP ratio. GDP. At the same time, money related to capital markets or direct financing keep increasing the ratio. 20% is still very low because the US has a superdeveloped capital market. 20%. As a result, the annual social financing in the United States 90% is formed through direct financing. 90%. Our G20, the so-called moderately developed countries, G20. The average is 60% formed through direct financing. 60%. China is still only at 20%, although we've already raised it from single digits to 20%, 20%, 20%. Over the next 5 to 8 years, according to discussions by different CIRC experts, 58. This value ranges from a conservative estimate of around 30 to 40, 3040. Optimistic expectations reach 50, accounting for the total social financing of the entire year. 50. So, as you can see, from everyone's financing, purely from a policy and financial perspective, whether it's financing, whether it's the capital market, the interactions of this matter, or of course corporate bonds, it will become the most important development tool for Chinese finance in the coming years. Because we mentioned that in recent years, China has been painfully deleveraging. Or you could call it deleveraging. So over the past 7 years, China's macro leverage ratio, 7. Basically, it only rose about 8%, from 249% to around 250%. 8%, 249%, 250%. So basically, I didn't move, keeping my leverage. But what we just discussed is related to financing and our investments. Whether from a policy perspective or China's financial structure, prices are likely to continue rising. This is what we are talking about. You have to look back at whether China will experience a capital winter. It is nothing more than today's macro perspective of the supply and total scale of money in society. This also includes today's look at China's financial system and structure. For this kind of equity investment, IPO financing, and bond issuance, what kind of long-term policies and trends are these matters? This determines whether we should consider the next 1, 2, or 3 years as a capital winter. Problem. That's all for now. Let's talk about the United States. Recently, our CEO has been asking quite a lot. CEO. Let's quickly talk about US data. In 2000, the dot-com bubble burst, 2000. Previously, all 3 of my numbers were the same. GDP is $10 trillion, and the US national debt is $5 trillion, GDP 10.5. The market capitalization of the US capital market is $19 trillion. 19. Before the dot-com bubble burst, the market capitalization of the US capital market was twice the US GDP, GDP 2. That's 187%. 187%. Before the 2007 financial crisis, the US GDP was $15 trillion, 2007, GDP 15. The national debt is $7.5 trillion, and the market capitalization of the US capital market is less than $140, 7.5, 140. That's less than 1.4 times the GDP. 1.4 GDP. So why did it break at 1.4 times, and why is it still so serious? 1.4? Because that crisis in the US started with real estate. Then it derives into the financial system, rather than starting from the capital markets. Of course, this also affects the capital markets. So, what does today's US financial system look like? We only listed the numbers. In 2021, the US GDP was $23 trillion, 2021 GDP 23. US government bonds, we call them national debt. That's $32 trillion, which is 130% to 140% of GDP. 32, 130%, 140% GDP. Then, in the fourth quarter of last year, the market capitalization of the US capital markets. The highest was $52 trillion US. 52 trillion yuan is 2.2 times their GDP, 522.2 GDP. That's 220% of GDP, surpassing the historical record set in 2002 20% GDP, 2000. So, this is the problem for the United States. If you pay attention to the data, the challenges China and the US face today are different. Because many people have recently asked me about the US, or actually Biden's performance in South Korea yesterday. The discussion also mentioned the United States. According to third-party statistics, after 1976, after 45 years, the United States 1976, 45. For the first time, GDP growth has the opportunity to surpass China's GDP. I guess this statement isn't very macroeconomic. This is because the US GDP showed negative quarter-on-quarter growth in the first quarter of this year. GDP. The US uses different statistical standards than ours. The statistical standard it uses is all quarter-on-quarter for GDP, GDP. This is the situation this quarter compared to the previous quarter. So it declined quarter-on-quarter. The process by which the US historically confirmed economic recession is: if GDP declines quarter-on-quarter in both quarters, it is negative GDP. It confirms the entry into recession. Alright, today we won't discuss this issue. The issue we discussed is whether the US has grown or changed over the past 12 years, 12. It's because since the financial crisis first printed a lot of money. The fourth round of quantitative easing refers to quantitative easing, which started in 2008 or early 2009, 2008-2009. From late 2008 to early 2013, and then this bubble, 2008-2013. This is the massive cycle of printing money, which will end from the end of 2015 to 2017, 2015-2017. It will pierce through, and by then, signs of starting to appear are already there. But later, because the previous US president coerced the Federal Reserve not to allow rate hikes. At the same time, they also implemented tax stimulus policies, such as large-scale tax cuts for enterprises. So, combined with fiscal policy, this bubble continued. Then it continued until April 2020, and from April 2020 to 2022 2004, 2022. April, out of 24 months in these 2 years, 24. The money printed by the United States or the growth of the Federal Reserve's balance sheet. After the financial crisis, from 900 billion to 4 trillion, 90004. From 4 trillion to 9 trillion, surpassing the financial crisis, 49. The Fed's money printing growth has increased by 20% to 30%, 20% to 30%. That is, during these 2 years, there was 30% more than in the previous 4 years. 30%. These are 2 so-called cycles of massive money printing that haven't been pierced. Even today, due to various issues, the rest of the thread only discusses problems in the United States. We won't discuss it today, but the problems it faces are different from ours. The challenges are different. This is why the capital winter has formed. Simply put, it was back in July and August last year, 7 to 8. Many of our economic policies in July, August, and September will impact the industry, 7, 8, 9. People don't understand, and then the secondary markets of China and the US started to decline in the fourth quarter. Then negative emotions piled up because of this, and the war began in March this year, 3. On top of that, international relations have been turbulent, and at the same time, the impact of China's pandemic has been added. Basically, it refers to the consecutive unexpected events occurring over the past 7 or 9 months. 79. Everyone's mood has become quite negative. There are a few sub-propositions that I will quickly explain related to entrepreneurs. The platform economy is because few people are involved in the internet industry. I'll skip it and skip it. The differences between China and the US are quite important, in terms of investment. There is a complete preference for different things in VC investing. VC. In China, everyone is saying that our votes are related to policy. This is the issue everyone talks about technological innovation. The reason I just explained is partly due to China's economic structure. This is the image we started with. This economic structure is the middle diagram, representing China's economic structure and GDP structure, GDP. Determine what matters to us. This is the first sentence. The US is completely different from this picture. 22% of the US GDP is related to the financial sector, 22% GDP. 16% of GDP is related to biomedicine, 16% GDP. Of course, there are also military education and other factors that make up a proportion. Looking back, China's problem is because of our capital markets and capital markets. The relevant investment market is us. Because investment and capital markets are starting to serve the economic structure. So most of the investment activities we see in China today, all are related to changes and adjustments in the economic structure, or what we call policies. That's one thing. The United States is different because its economic structure, or its GDP structure, GDP. As a result, the American profile picture has become increasingly distant from China's. The reason is that the foundations of the two countries are different. Today. As for the issue of VIEs in Chinese concept stocks, let's briefly explain here. VI. This is one of the core functions of the United States, serving as a global financial center. As a global financial center, the implication is to solve the global asset listing problem. This is about why China's tech innovation practitioners are so sought after today. The world, or the source of all economic growth. One of these elements is called TFP, TFP. This is called total factor production efficiency. There are two other things you can see here. One is called capital, which is money, the other is called labor. It's actually about labor. On the table on the left, you can see that in different cycles, how these three elements contribute to China's economic growth. The image below is very important. America is completely different from what people imagine. It was economic development, which actually existed before the internet. Or we call it the first and second industrial revolutions. It's the picture on the left. Its TFP is called Total Factor Production Efficiency Improvement, TFP. Is extremely significant. Actually, starting from the internet, starting in 1994, or starting from 2000, this TFP, 2000, TFP. The growth in production efficiency is very low. Less than 1, only in limited years above 1. 1. But it's different from what people think. Why is the internet's contribution? There is no big first and second time, not necessarily. Because when the internet was widespread in the United States, the efficiency of internet solutions was, or digitalization, in the United States, the efficiency solved is media issues, entertainment issues, communication issues, and so on. These issues in the United States have solved part of the efficiency problem. So there were several years in between when growth exceeded 1. But compared to the past two cycles, growth has been around 2 or 22. The gap is already very wide. Besides that, the biggest difference between the US and China is what we just mentioned is that when digitalization became widespread, its industrial structure has changed. It has already placed a lot of. We talk about regional industries, which bring together a large number of industries. Or that manufacturing has moved away from the United States, so it can use the fields and directions of digital technology. Will gradually start happening in its typical direction? Only those media, entertainment, and communications remain. Financial and partially medical. The problem with China is this: China is not quite what we think. We have experienced the high growth phase of TFP, but TFP. It's the one on the left, but after 1415, It also went through TFP, a phase of relatively reduced efficiency, TFP. The red line is us, the blue line is America. All the policies you see in China today are designed to address the issues in capital. We call this investment pull and an increase in total labor supply. Or cheap labor costs, all these first two elements. Money that is no longer useful or not very useful. Or under the awareness of not growing money, you need to rely on increasing TFP. It's called production efficiency. So how did TFP grow? TFP? The biggest difference between China and the United States today is that our industries are still there. Because in this chart, China's industrial added value. It accounts for 32% of GDP, or more than 30 trillion renminbi. GDP 32-30. China's industrial added value accounts for 30% of the world's total, 30. The total industrial added value worldwide is just over 100 trillion. 100. China also accounts for over 30%, and of course, both of these are number one. 30%. Since 2011 and 2013, China 2011-2013. That's first place. So the problem with China is, although we have a lot of industry, but our TFP is not efficient enough. TFP. Please don't hesitate to like, subscribe, and share to support the Mingjing and Dian columns.